business news now, and it's a tale of two cities, this time Washington and Frankfurt, home to the world's biggest central banks. Both banks have lifted interest rates by a quarter percentage points over the last 24 hours, but provided very different outlooks. In the US, Federal Reserve Chairman Jerome Powell hinted that interest rates may not go any higher, despite the fact that inflation remains well below his 2% target. But just a few hours ago, European Central Bank President Christine Lagarde warned that she's not nearly done hiking interest rates, even if that engineers a sharp slowdown in European growth.
We have a target, we have a journey. We know as of today that we have more ground to cover, and whatever the decision of the Fed is in the next few weeks, months, we are going to be riveted to our objective, and we'll of course take into account variables. You know, the currency, for instance, has an impact. Any spillovers will be taken into account, but we are not Fed dependent in that respect.
Christine Lagarde. Well, for more on this and the rest of the day's business news, including a new president for the World Bank, let's cross over to London to speak to Arise business correspondent Laurie Laird. Good to see you, Laurie. Let's look at the European Central Bank first. No end in sight to rate hikes, apparently.
Christine Lagarde, the president of the ECB, was very, very firm on this. Yes, the ECB raised rates by a smaller margin than it has over the past couple of meetings. That's a quarter of a percentage point, rather than these larger 50 basis point or half a percentage point moves that they have implemented in the past meeting. But Christine Lagarde was very clear. We are not done yet. Inflation is far too high, well above our 2% target. We are not stopping yet. And in that soundbite that you and I just listened to, she really did compare and contrast with the Federal Reserve, which is seeming a little bit more cautious. The message that Christine Lagarde wanted us to see is that the ECB is not done hiking rates. And regardless of what that does to the European economy, she is prepared to continue to tighten rates to get inflation down. Now, when Christine Lagarde started in this role, her messaging was a little bit shaky. Over the past couple of months, she really has lit on a message. She's been very, very clear. ECB not done hiking rates yet.
Right, but of course over in America, Laurie, a very different outlook from the Fed Chair Jerome Powell.
Absolutely, and Christine Lagarde said as much when we saw that just a few moments ago. The statement from the Fed's meeting yesterday, it came out just about 24 hours ago. The statement was a little bit woolly. The Fed did refer to the fact that they could tighten rates further, but when Jerome Powell spoke in his press conference later, he was very clear and said this could be the end of the tightening cycle, which is an interesting, again, compare and contrast with the Eurozone. The U.S. economy, by most metrics, is stronger. It would make you think that the Fed might be prepared to be more aggressive than the European Central Bank, but it looks like the Fed is willing to pause for a little bit and see where these interest rates lie. You have to wonder whether these central banks, particularly the Fed, are a little bit concerned about what happens if they do engineer a recession. Would there be political fallout? Would there be popular fallout?
And where do sort of bank failures fit into all this?
This is such a big question, and it's something that we've been discussing. The problems that we have seen in the U.S. banking sector certainly suggest that credit, that loans will be constrained. Banks are in a difficult situation right now. We've seen a couple of failures, 3 in the past 7 weeks. That does suggest that banks are going to become a little bit more cautious. They may not lend as readily as they had. One thing that is so striking, though, is Jerome Powell, the chairman of the Fed, opened his press conference yesterday by saying, I want to talk about banks. The U.S. banking system is solid. Let's have a look here.
Let me comment briefly on recent developments in the banking sector. Conditions in that sector have broadly improved since early March, and the U.S. banking system is sound and resilient. We will continue to monitor conditions in the sector. We're committed to learning the right lessons from this episode, and will work to prevent events like these from happening again.
Charles, a lot of us are scratching our heads at that comment because over the past couple of hours, we have seen two regional banks say that they are struggling and they are putting themselves up for sale. This is exactly what we saw with First Republic, the bank that was rescued by JP Morgan earlier this week. At first, it tried to get some support from bigger banks. It put itself up for sale. That did not work. We have two banks today that have said the same thing. So contrast that with Jerome Powell saying the banking system is solid. Something isn't adding up here. So I do think there are more problems in the banking sector to come, not so much with the big banks, not with the Citibanks and the JP Morgans, but with these regional banks in the US. And it's remarkable to hear Jerome Powell say nothing to see here.
Laurie, let's turn to the World Bank. What more can you tell us about the person who's become the new president?
Ajay Banga has been installed as the president of the World Bank. He's an Indian national, although with American citizenship. And of course, it's always the Americans who appoint the head of the World Bank. Europeans have dibs on the IMF. Americans have the World Bank. He's very well respected. He was a head of MasterCard, really transformed that business. When he was nominated by the Americans, there were some concerns about the fact that he didn't have any public sector experience. He had never worked with an NGO. He had never worked with a multilateral organization. He's also a little bit surprising because he's a man. The World Bank made it very clear that they were encouraging female candidates. And we know that this role usually or always goes to an American. We know that the World Bank was looking for a woman, and we know that a lot of developing countries would prefer to see one of their own in that role because the World Bank does lend to developing countries. And of course, there was one candidate that I think you and I discussed a couple of months ago, and that's Ngozi Okonjo-Iweala, Nigerian by birth, American citizen, a woman from a developing country. Many people thought that she may have been a very good candidate, although it went to Mr. Banga, but he is very, very well respected.
Much indeed. Laurie Laird, a Rise business correspondent, talking to me there from London.